All right, futures red across the board on the back of the government shutdown news and ahead of today's open for October 1st. However, they're considerably up off the lows. S&P futures down 0.41%, Dow futures down 0.3%, and the Nasdaq futures down 0.47%. So we are less than a 0.5% down on this little bit of a gap down. And as mentioned, it is up off the lows. S&P futures actually tested 6680. We're currently at 6711. So a nice little bounce going into the open. We'll see if we get more of that here today. Let's take a look at some cues from the last session here. Most sectors in the S&P 500 closed on a positive note, with information technology, healthcare, and industrial stocks recording the biggest gains on Tuesday. However, energy and consumer discretionary stocks bucked the overall market trend, closing the session lower. U.S. stocks still settled higher as the Dow Jones surged to a new closing high. The government shutdown comes after major indices recorded gains last month. The S&P 500 gained more than 3% for September, and the Dow added almost 2%. The Nasdaq jumped 5.6% during the month. On the economic front, U.S. job openings rose by 19,000 to 7.227 million in August from a revised 7.208 million. The Chicago Business Barometer declined to 40.6 in September from 41.5 in the previous month, compared to market expectations of 43. The S&P CoreLogic Case-Shiller Home Price Index increased 1.8% year over year in July. Now let's go back to some more stuff about the shutdown here. Indices dropped as the U.S. federal government officially entered a shutdown at 12:01 a.m. on Wednesday morning, October 1st, after Congress failed to reach an agreement on a spending plan. However, historical data suggests that these events are often short-lived and have a limited long-term impact on equities. In fact, the longest shutdown ever was 34 days. That happened in December of 2018 into January of 2019. Meanwhile, the 10-year Treasury bond yielded 4.15%, and the 2-year bond was 3.60%.